Good morning, everyone. Welcome to this week's edition of Back to the Futures with me, Markets and Mayhem. Hope everyone out there is having a good start to their week so far. Holiday shortened week at that. Through how I use Bookmap and the SPX options visualizer to find trade setups and trade order flow. Of course, if you have any questions during the stream, you're more than welcome to reach out in the chat. Let me know. So we'll get this party started here. First, no presentation would be complete without the disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Now, the kind folks at Bookmap would love for you to join them on their Discord. They've got a lot of cool stuff going on, including regular events with folks like me educating about how to use Bookmap for your trading. And you can do so by using the QR code on screen, or you can visit discord.com/invite/bookmap. We do have some exclusive deals for you all as well. You get up to 30% off of qualifying TraderAid plans using the code Black Friday at checkout at traderaid.com. You can also get up to 40% off of Bookmap plans at traderaid.com/bookmap. Scroll down to the specials area for those discounted plans, and we've got a bit of a reveal coming up this week. In just 3 days, Bookmap's Black Friday offer will be revealed. A little bit about me. I started my trading journey back in 2005. I funded my own account and began trading stocks, then moved on to options, futures, commodities, and Forex. I expanded my horizons in 2006 as I started rolling my trading profits into long-term investments. And that was a big thing for me. I think that's actually a really important part of trading and being successful. It's rolling those profits. Because you don't want to have everything in just a short-term trading account or even a swing trading account. It's important to have that profit rolled into investments, whether those investments are stocks, fixed income, real estate, businesses, or otherwise. So you have some diversity in how you're generating income and wealth. I navigated through the great financial crisis, which helped me to better appreciate the importance of understanding intermarket dynamics, momentum, and macro. I went into that with just being a technical trader, and I came out of it feeling like I got a better feel for how the financial plumbing works because it all fell apart before our very eyes, and that gave me cause to really want to examine the importance of monetary policy, fiscal policy, earnings, economic data, and what's going on around the world. All of that blends together, and it's an important part of my process as a systematic trader. So I managed to get through the great financial crisis and even out of the way of it by being a technical trader, but having learned what I did throughout the crisis and emerging from it, actually generating wealth during it. I had some great trades, I had some terrible trades, but more winners than losers. I was able to start to identify one key theme. My strategy is much more systematic. What works for me as a trader is being much more driven by data than emotion or gut feel. So I'm not as much of a discretionary trader. I'm much more of a systematic trader, which is why you probably see me talking about building tools and ways to analyze markets, because for how I trade, that's what helps me the most. So being a more systematic trader for me helps me to be able to discern signal from noise, be a lot more careful about my setups, have more risk management protocols built on the data. Like I like to use IVOL plus RVOL divided by 29 as one of my stop outs, right? And that also allows me to have more confidence because those strategies are back tested before I'm putting them into play. So my approach now is systematic, driven by momentum, price action, options flows, sentiment positioning, volume profile, and the big picture. And it sounds like a lot until you just add them as weights into a model to qualify where there are opportunities to get long or to exit because risk is becoming more prevalent than reward. I began working with Bookmap in early 2022 because I saw great value in the way their platform displays market data. I co-founded TraderAid in 2022 and Macrovisor in 2023 to share my experience, ideas on market opportunities, and education. And as I said, I also build a number of unique tools and models, and I provide one-on-one coaching. And those tools and models are largely focused on helping traders, particularly systematic traders, to gain an edge in markets. So with all that being said, let's go ahead and drop right into Bookmap here. We can see on screen we've got a filtered view of the S&P 500 futures contract, and we'll just zoom that out so we can talk a little bit about the overnight session. So what happened last night was pretty interesting. We had the Trump transition team come out and say, you know what, we're going to impose some pretty significant tariffs on Mexico and Canada. It was talked about I think 25% for each and then an additional 10% hike for China. So obviously that wasn't well digested first by the market, but we've had this bounce overnight, and I think it's the market more and more realizing that, you know, in actuality, this is probably more of a negotiating strategy. I even tweeted about this back on, I think it was November 8th or so, shortly after Trump won and these tariffs are being talked about, that he loves negotiating and he loves going in with the upper hand. And this is one way to achieve that type of an outcome. You get the upper hand by essentially waving this idea of a big stick saying, you know, if you don't do what we want, you're going to have these big tariffs imposed on you. So obviously folks on the other side of the negotiating table might be more likely to comply rather than deal with that. So I think that's what the market realized, and one of the reasons we had this reversal overnight. And we are set to open here just above that 6,000 key area, that wall of call exposure. So S&P 500 futures right now imply a cash open of about 6,005, up about 0.3%. NASDAQ futures imply an open up of about 0.4% here. So it's interesting to see that, you know, with the context of everything that's going on, that folks are basically saying, you know what, tariff talk is just that. It's just tariff talk. It's nothing more to be concerned about, at least yet, at least until we see that policy actually come to fruition, right? But I do think if we actually had tariffs of the kind that are being talked about, it would be pretty problematic. So it'll be interesting to see how this all plays out. So as we approach the market open here, we see this push higher. We have a little bit of passive selling happening overhead. This diamond here is actually a iceberg sale. So that's showing you that you've had about 500 contracts being sold into strength, and there are some open orders here as well. So there are basically some passive sellers coming in and just starting to either take profits or layer into shorts. We also have a pretty strong buy delta here that we're climbing above. So that does put buyers into a more advantageous position. If they're buying, you know, around these levels, around 623 down to say 620, or 6023 down to 6020, then you have a pretty good amount of folks that are now starting to be more in the money on their positions, and they may start layering in to that positive momentum. So it's always important to look at those deltas, and that's what the SVP does. The way that I've set it up, and you can set yours up this way too if you haven't already, is to focus on viewing the delta, right? I also show the VWAP line and the point of control. I think that's quite helpful to have on screen. That's the white line for VWAP and the yellow line for the point of control. But having those deltas there it gives you a sense as to where there's aggression at different areas of price and how that's being expressed. Just give me 1 second, folks. I just need to check into something here. All right. So let's take a look around some of these futures before the market opens. NASDAQ, a similar story as S&P, climbing after that sell-off overnight. Starting to see a push higher, seeing some liquidity build up here around 21,000. Russell, somewhat similar look here. Maybe not quite as much enthusiasm right ahead of the open, but still a climb off those lows that started during the European session. But really, we saw that during the Asian session as well. And crude oil continuing to be quite volatile. There are some pivots on crude that I will share with you all. Share some pivots for a number of different assets as we go through the stream. For crude oil, I'm looking at some larger, longer-term pivots. And the really important pivot on the downside is 68.83. As long as it can hold above there, I think there's a shot for us to get back to 72.52. That would be the pivot above that I'd be looking for. Again, this isn't just for day trades. This is more on a swing time frame that I'd be looking at this. But that is something to just mark on your charts, those two pivot levels. Above that, you've got 75.07 as another potential upside extension. And 10-year Treasury futures pretty much flat overnight here. Maybe a small reprieve in rates. But the higher they go, the more that may start to put pressure on equities and really other risk assets like crypto, for example. 4.5% is my line in the sand on the 10-year. That's where I'd really be watching with some degree of concern. Looking at gold overnight, it's had a solid run. Apparently, the next Treasury Secretary's largest holding is gold. So that's kind of interesting to digest. If we look at gold, the key pivot levels that I'm watching on this one, below are 25.8370, 25.0210, and just below 25.21.70. Now that 25.21.70 level is my key pivot for this week. Above it, I'm more likely to want to take longs in gold. Below it, I'm more likely to want to take shorts. And we can see above us here, there are two pivots that are key to watch: 27.1740 and 27.7240. So for gold, I'm looking at it constructively here. I still am looking for 3,000 in the first half of 2025. And I think that the recent sell-off and consolidation we've had is actually healthy as a part of a broader uptrend. And yesterday was gold options expiration, so you're going to have more volatility on those types of days as well. Silver is a bit of a different story here. We just have not seen the kind of stimulus from China that we need to see in order for it to get the run that it should. China accounts, it's the second largest user of silver globally. I think it's about 15% of global silver usage. So if their economy isn't online, if they aren't stimulating to get it back online, then it's going to remain somewhat challenged here. And Bitcoin is having a bit of a moment. We can see that it never really got to that 100K level. It sold off just under $8,000 from there. It seems to be regrouping. We do see a bit of a choppy session here overnight, but it does seem like it's trying to regroup, maybe put in a very near-term bottom here. We'll be watching and waiting to see how this plays out. But I think this is the ultimate high beta speculative barometer. When Bitcoin is selling off, you generally see other speculative assets move in sympathy with it as well. Now let's go back to the S&P because I do have some levels there to talk about. So this is based on my weekly market prep that I share with TraderAid members. Some of the longer term pivots that I'm watching in S&P, which are below us here: 6,000.25, 5963.50, and 5839.75. And we know that 5839.75 level has been a really important level, as has that 5963.60. So we'll be watching to see if we do have a retrace, what those levels mean. But the other area that I think is very important to watch is the wall of calls on the S&P 500 here. And that call wall today, it's looking like it's going to be about 60.25.75. And we are seeing just a little bit of selling pressure, about 5 minutes away from the open here. And we do have an interesting event calendar today. We've got new home sales coming in at 10 a.m. with consumer confidence from the conference board and a ECB central bank speaker at the same time. Then we've got a 5-year Treasury auction at 1 p.m. Eastern. At 2 p.m., we've got Fed minutes from the most recent meeting. So futures now just hovering around that 6,000 level S&P cash. So implied open just right at the massive gamma magnet that is S&P 6,000. So I'll post a chart of that on Twitter here just so folks can see. And we did see a lot of transacting around that level yesterday with options. In fact, the last many days, it's been all about S&P 6,000. So I think that will be a key level for us to watch today during this market. We'll also be watching the options flow with the SPX options visualizer that you can see here in the right-hand column, because it often sets the tone for how markets trade. Options trading about 1.2 trillion of notional every day in just SPX, or the S&P 500 cash index options, versus equity futures across the S&P, NASDAQ, Dow, and Russell trading about a half trillion, or less than half of just the S&P 500's notional value transacted in options every day. So it really is a scenario where options are the market, and it behooves us as traders to pay close attention to what those flows are suggesting. And we can see that point of control just around that level that implies S&P 6,000. You can see that layered passive selling also as we started to try to push above that level. You saw more passive sellers coming in and kind of, you know, just saying, hey, maybe curb your enthusiasm a little bit. So it's going to be interesting, the trading session today. It might be a little bit more choppy. It is certainly lower liquidity. It's been a regime we've been in for some time. Market opening now with the order book depth of 33,000 on the S&P 500, which suggests if you're day trading this, you really want to use smaller size and wider stops to not get shaken out. And the thinking behind that is if you're dealing with higher potential for realized vol due to a lighter order book, then you're going to have to widen your stop to account for that volatility. In doing so, it's better to downsize one's total exposure to the market so as not to take as much risk. And that's specific to day trading, right? If we're swing trading here, the order book depth of the S&P 500 is not as big of a concern as it is if we're day trading and we have to deal with the dips and rips and slippage that may occur in this type of leptokurtic distribution of tail risk. Holiday trading weeks like this tend to be more constructive. They tend to favor the bulls, but also they're not often greeted with such a large and important area of options positioning smack in the middle of where price is. So we'll see. We'll watch that level. We'll watch where options are transacting in relation to it and get a sense as to where flow is going. We'll also watch the 20-minute opening range in the S&P 500. And interestingly enough, even after the open, liquidity actually thinned out a bit on the order book. You can see there's a pretty decent offer overhead around 60.30 though, so we'll be watching that. May act a bit like a magnet, pull price towards it. And once we get to it, what's really key is how price reacts. If you look at the market as an auction, buyers having more than enough demand would take us right through that offered liquidity and we'd keep pushing higher, and that would be a very bullish sign. But if you get right up to that and you reject before absorbing that liquidity, that's giving you the sense that actually buyers don't have the demand to push through that supply, and that can be a bearish rejection. So watching how price reacts to liquidity is actually a really powerful and important way of using Bookmap to understand those order flow dynamics. The options visualizer is an add-on for Bookmap. So it's something that I've built and you can find more about at traderaid.com/SPX. And basically what it does is it goes through about 10,000 different contracts on the S&P 500 cash index, all the options that trade through it, and it analyzes them on a minutely basis, so every minute during trading hours, and then it refactors that for where there's key levels of positioning and flow. So I wouldn't just, so a couple of questions here. I just want to make sure that we get to everyone's questions. So how do you determine the hot call, hot put, warm call, warm put, etc.? It's a great question. And the way that I determine it is that I analyze all of the CBOE S&P 500 options flow, which is the vast majority of flow in the contract. And I have an algorithm that will discern where the most active strikes are across the entire chain, and it'll update that on a minutely basis. So right now we're seeing yesterday's flow until we get enough flow today for it to start to refactor it, and that usually happens about 10-15 minutes after the open. So we'll be watching that, and that flow updates every minute. So it changes, throughout the day as to where that distribution of opinions about price outcomes is being registered through options. So it's all automated. It's all programmatic. It's basically a program that I've been building for the last 2 years and continue to add new features to and build in to make it basically more polished over time. But it's really, I think, a day trader's best friend, because the S&P 500 options move the futures so much because market makers are hedging what people are buying and selling in the options market largely in futures. So it has a direct impact on the market. Next question. Hi, teacher. When you are saying about the delta and different levels of aggression, how would you know to go long or short based on those levels in the SVP column? So one of the things that I talked about in the intro is I'm a much more systematic type of trader. So I tend to use multivariate analysis to do my trading, which means that I would take into consideration the delta, but I'm not going to trade just off the delta. It's going to be one factor that I look at. And so when I am looking at it, let's say, for example, we have this really large set of buy deltas here. If we move below those buy deltas, let's say by 5 handles, and those buyers get off sides, they're more likely to become motivated sellers. So we're inferring from that buy delta that these are in fact buyers. They're not just covering shorts. And much of the time that is true. We can make that sort of naive inference. And in doing so, we can say, okay, well, if the market moved down to, let's say, 60.15, then we could reasonably conclude that more of those buyers are off sides. Now, another thing that would happen is if we started to move lower, we'd say we're rejecting that S&P 500 cash index level of 6,000, where there's all that options positioning. That's about ES, I'm going to say it's about 60.18. So that would be another thing that would be saying, okay, now we've got 2 areas of confluence. We're both rejecting the aggressive buy delta and we're rejecting some of that options positioning, right? So those 2 things would help me form the idea of getting a short. The last thing that I'd really want to see are 2 separate areas. First, I'd want to see options flow on the put side in excess of calls in SPX by a healthy margin, 30 to 50%. That gives you a sense that market maker hedging is going to pull liquidity out of this market as they short S&P futures to make up for selling that put, right? They have to hedge their delta to be neutral. And then the last thing is I'd want to see the 20-minute opening range broken to the downside with downward momentum. So if you have those 4 factors in play in this theoretical scenario, that would give me pretty high conviction that a short would be the right play. And you could take this the exact opposite way and say, you know what, if we build up, let's say we get right through that 60-30 level of offered liquidity where there's 228 contracts on offer, and we push right through it, no looking back. Calls are in excess of puts on the 2 most active strikes by in excess of 30 to 50% or higher, that we have an upwardly trending day. That would all give me and we're pushing above those aggressive buy deltas by a healthy number of handles on the S&P. That would make me want to take longs, right? So it's using those 4 data points to find confluence and have more conviction, but also using a systematic approach. It's all data driven to derive whether shorts or longs are favored in that setup. So let me know if that's helpful. And then I'm asked, do you wait for levels to trade or watch the IV to get into a position? So, I mean, it really depends on what I'm trading. For the context of today, we're talking about day trading using order flow. I like to use the 20-minute opening range. I like to use the prevailing S&P options flows. And I like to look at where liquidity is on the chart. And then, of course, I like to look at the session volume profile and see if anyone's getting more offsides. So those are kind of like the 4 main touch points that I really like to look towards to get a sense as to how I want to trade something on a day trade time frame. Right? I don't want to just go in because I've got a gut feel, or, I feel vol is elevated or too cheap, etc. I really want to go in and have data that I can backtest that gives me a higher degree of conviction that I'm going to come out with a higher chance of making a profit on that trade. So that's all the questions I have right now. If you all have any other questions for me as we're going about today's session, please do let me know. And pretty soon we'll start to be able to see those flows live from the SPX options visualizer as well. And we're just about 12 minutes into the 20-minute opening range. So we have so far about a 10.5, 11 handle opening range. Nothing that suggests too much volatility during the trading session of yet. In single stock flows, we do see some call buying coming in for AI, which is basically a short squeeze beneficiary, but not too much interesting flow in the early part of the day yet that stands out to me. And we can see that wall of calls just up ahead. And I do believe that level needs to be refactored. Let's zoom out a little bit here as well. We can see we're well above the gamma flip level. That is something that we also recalculate throughout the trading day, and the vol trigger. So overall, you could say, you know, bulls have control here. And the reason I say that is if you backtest positive versus negative gamma regimes, positive gamma regimes tend to lead to more upward price discovery, and negative gamma regimes are both more volatile but also tend to lead to more selling. So we're sort of back at that point of control, testing it here at the open. Let's check on the NASDAQ. NASDAQ well above its VWAP and point of control. So NASDAQ up about 0.5% here, S&P up about 0.2%, tech showing a bit of relative strength today. And there were a lot of new highs registered on the NASDAQ composite yesterday. It was actually pretty interesting to see just how many new highs came in yesterday. Suggests a bit of a breadth expansion underneath the surface. So, I've got that chart here. I'm just going to share that with you all real quick. The new highs versus new lows on the NASDAQ. That's right here. And you can see yesterday is pretty major amount of new highs. The most new highs that we've seen in several weeks. So that's a pretty big thrust in terms of the number of upside participants, most of them being smaller tech companies. And I think they probably take the reins here. The larger techs are slowing down a bit in terms of their growth. They're still growing, but they're slowing. And some of the smaller SaaS companies, some of the smaller cybersecurity companies, et cetera, still have some potential upside. So something to consider. Let's look at some of the mega caps here as well. Apple pushing to new highs, but there's a large amount of offered shares above us at 235. You can see that enormous amount of liquidity here on the heat map. And you can also see that we've rejected there twice so far. So far, buyers are telling us, yeah, we're pretty excited to buy Apple shares, but we just don't have enough supply to throw 330,000 shares to the buy side on this stock. Then you've got Amazon here. Buyers are able to chew through several key liquidity levels on offer, just rejecting 36,000 on offer at 206, but they just chewed through 145,000 at 205. So it looks like Amazon buyers definitely have some gusto this morning. They just chew through these levels one after the other after the other. A bit of a rejection at 206. We'll see where that goes, but so far the stock looks pretty strong based on supply and demand. Alphabet got a good start out of the open, setting new highs. Large offer overhead at 170. These stocks are helping to drive the NASDAQ higher. And Meta also chewing through that offered liquidity pretty readily, making a new session high just before pulling back to 569.35. Microsoft chewing through offered liquidity as well, looking pretty strong that the buy-side demand for this stock is quite healthy. There's a decent-sized offer overhead at 425 with 38,000. And then, of course, NVIDIA. NVIDIA is more volatile lately. We can see it did set a new session high off the open, but now retreated back to VWAP in the point of control. And on this stock, the distribution of liquidity is still much more on the upside. And once again, 150 and 160, over 1 million shares offered at both levels, which is a lot. That's a lot. And that came on offer after the market opened. And then finally, Tesla. Tesla also having a pretty good start to the day here, chewing through offers overhead. There's a decent sized one here at 345, 33,000 on offer. Initially rejecting there, but not by much. So this stock actually looks like it probably has the demand to make a push through there. We'll watch that as the session goes on here. Back to the S&P 500 though. Let's see where we go from here. We've got some convergence between the wall of calls, VWAP, and the point of control. So we can tell this is a really important level that we're starting to build some acceptance above. For me to get bullish and want to take a long on this with probabilities on my side, I do want to see a push above the opening range that is also supported by the distribution of options flow. So far to start the day, we can see that the most active call strike here is the most active strike on the chain. So if we're looking at flow, and I have a whole channel on our Discord dedicated to this specifically, we can see that hot call is building at S&P 60.05 and then 60.10. Those are two really active areas on the chain this morning. And then the hot put, we're seeing more activity around 59.50 and 59.65. And we could see that flow growing in the calls versus the puts. So far, it is looking like buyers are going to try to take control of the price action during this session. So S&P cash trading 6,006 here. We're building acceptance above that really large level of options positioning. We continue to see call flow build, pulling price into this large level of offered liquidity and pushing to the top of this opening range here, which we've now formed our 20-minute opening range. So a lot of things coming together here that are starting to look more bullish here as we kick off the trading day. Let's see if we can build some acceptance at the top of that opening range and that option flow continues to favor those calls. But we can also see we're starting to push above those aggressive buy deltas. So again, everything kind of favors the buyers here. I'd love to see that push above the opening range, absorb this liquidity, call flow to continue building. I think that gets us wanting to really be meaningfully long here for a, just a short-term day trade capitalizing on a potential trend. S&P cash trading up 1/3%, NASDAQ cash over 0.6%. And that push continues here. We're pushing above the 20-minute opening range. We see call flow continuing to build. Calls on the S&P chain outpacing puts more than 2 to 1 on the two most active strikes here. And in the broader aggregate of the put-call ratio across the entire chain, we see calls outpacing puts by about 13%. Seeing some passive selling coming in here. It's just to be expected. We saw a little bit of that earlier, just at a slightly lower level if we go back. So we could reasonably expect there'd be some passive sellers here. But overall, the distribution of all the data I'm tracking here suggests we've got more upside to go. It's going to be really important to see how we react to this offered liquidity just overhead. And folks, if you want to check out Bookmap, you can get up to 30 to 40% off. Visit traderaid.com/bookmap. That's traderaid.com/bookmap to take advantage of that offer. Just scroll down to the specials. And then if you want the data add-on, that is the SPX options visualizer for Bookmap, visit traderaid.com/SPX. That's traderaid.com/SPX to learn more. And you can get that as a subscription that you add on to Bookmap. It's available exclusively from TraderAid. And we see a bit of a pull here in S&P. So we haven't yet gotten our long signal. Remember, we were looking for an opening range breakout. We started to get that, but we needed to push through this liquidity. We haven't yet gotten that. So let's see how the market regroups here and if this setup comes back into play. Remember, there were those four factors we were looking for. We got it with the options flow. We started to get it with the push out from the top of the opening range, but we also needed to see a push through this offered liquidity and a bit of a move higher above these aggressive buy deltas. We didn't get the other two pieces, so I didn't have a trade yet. So I'm still in watch mode, looking for opportunities. And I take both sides in the market. If we see things favor sellers, we can always look at that side of the trade as well. Of course, options flow would have to favor them. We'd have to break below the bottom of the opening range. And it would be ideal to get below this convergence between the vol trigger and this sell delta here. So basically, the area that we're in right now, I would consider a sort of neutral zone. We have to break above or below the range and have flow confirm that before I want to really get into a long or a short. So we're retesting the point of control here. The bullish outcome here would be that we base here and we start to push right back above the opening range. The bearish scenario would be we break below here and VWAP and start to break below the opening range. So far, the distribution of options flow suggests a move higher is still the more likely outcome here. and starting to make a push below the point of control here, now testing VWAP. And we are seeing that hot put activity actually start to grow here. And that is at our favorite level, S&P 6000, which translates to ES 601750 here. So that is another area to kind of be aware of. We've got that option flow now starting to build on the put side of the chain, and it's pulling us right into S&P 6000. And we're kind of trading between the most active and second most active put strike as to what is right there, right with confluence at VWAP, right with confluence at S&P 6000. May end up being a bit of a magnet level like we talked about earlier before the market opened. Coming up in about a minute, 20 seconds, U.S. home sales and U.S. Conference Board consumer confidence. Those are going to be two kind of important event volatility catalysts to watch. So we'll be watching those. I'm going to just adjust my heat map settings a little bit here. But you can see on the order book, most of the bids and offers near price are gone, but that 60/30 is still on the book. So someone is still interested in that pricing, right? They're interested in selling there, but they're also interested in price going up there, which is the most important conclusion there. We're also getting news from OPEC. OPEC begins talks on delaying oil production restart again, so that is having an impact on crude oil here. We're seeing that pop. I'm just going to zoom out a little bit so we can see it a little more closely. Got that pop. It was faded. A lot of these headline-driven algo moves get faded, and this one was faded too. But we did get up here to about 70.30 before we started to see that move faded. So going back to S&P, just 2 seconds left now. We're going to get that data. Consumer confidence coming in at 111.70 versus a forecast of 111.75 and a previous reading of 108.70. New home sales coming in at 0.61. So this is 610,000 versus a forecast of 725,000, a prior reading of 738,000. That's not so great. So that's kind of a nasty miss. I think that has a lot to do with mortgage rates perking up here. An initial market reaction to that headline was negative, but we are starting to make a little bit of that up. So that is a month-over-month change of negative 17%. And folks, I'm going to hop off the Bookmap stream, but I'm going to keep this live stream going on Twitter and my YouTube. So if you've joined me on the Bookmap Discord, you're welcome to continue, or on the Bookmap YouTube, you're welcome to continue following the live stream on my YouTube or my Twitter stream. But I want to thank you all for tuning in, and I will catch you next week for the Bookmap stream at 9 a.m. Eastern on Tuesday.